Yo, what's happening, guys? This is the second time recording this video because the first one didn't record. So hopefully this one does. Let me just double check. Testing. I can't do it a third time, guys. All right, cool. So, oh man, the first time, if you have to do it a second time, you just lost all the momentum. All right, so basically in today's video, I'm gonna break down a move I caught today on my 500K top step stack of 5 times 100K accounts. I'm gonna quickly go to top step just to show you. Here we are. Right, I was in this trade for 1 minute and 30 seconds. There it is, 1 minute and 35 seconds. This was the result, $497 on the day. Crawling out of drawdown, finally out of drawdown on this account. Well, on this stack of accounts. As you can see, December, I went into drawdown, came a little bit out, back down, went deeper. I was 1,300 in drawdown, so I had to go super light to crawl out of drawdown here. And now, come up, boom. We are now at 100,075, right? So we got to hit 6K to pass this. When I get 2 to 3 grand into profit, I will start going a bit more aggressive, but like literally, we have to crawl before we bull. So yeah, that's where we're at on this account. All right, let's get into the actual trading. Let's get into the trading. All right, so, right. As you can see, we are holding bullish market structure, right? This is all internal market structure. These lows are all session lows, right? So this is the London low for Tuesday, the 6th of Jan. This was the low of the day. Thursday, the 8th of Jan. And look at that. We were trading off of these blocks and these pushes. I did videos on these. But basically, the important thing is we're still in a bullish BME cycle, right? So on the higher time frame, we're still bullish, but on the lower time frame, a correction to take out these lows will give us the fuel to go higher, right? That's just how the market works, right? Now, the reason why I was bearish on the day is because basically we had the new week opening gap from Sunday, 4th of Jan, right? This has not been mitigated. We had these session lows unmitigated. So I just felt like potentially we could have a short-term sell with a long-term buy. But I trade on the smaller time frames, so I like to trade what's happening right now. I don't really have the psychology for swing trading. I tried it, just done my head in. Even trading a 4-hour, not for me. So anyway, came to the market and we need to start observing what's going on, right? So yesterday we caught the sells, didn't we? This was yesterday, yeah. Right. So we've taken out a previous day's high. Okay, so we start to form what we need to see for our sell to be valid, basically. We want to make sure that basically the draws on liquidity are below us rather than above us. All right, so the fact that that's been taken out is nice. It's been swept. The prices come down here. Now, obviously, pre-market, we mark up order flow, all those good things. So order flow, market structure, all those good things that basically give us our indication of where the market could potentially be going, right? So I marked out the Asia high, London high. I had these draws below us. But really, order flow on the 15-minute was holding, right? So basically we had this 15-minute bearish fair value gap that was holding. price came down, made another one, right? So we're literally looking like we're going to be heading towards these draws if order flow holds, right? But the main thing, right? The main thing. So my strategy is basically a BME cycle. I'll show you a BME cycle, right? This is a BME cycle, right? Bang, and then extend, right? This is the play, right? Now, what can happen is, so that goes there like this, right? That's my point of invalidation, and price should sweep this, mitigate this 50% of this range, right? Put in a low, put an inverse fair value gap and push out of there, right? And then I'll just be buying this extension. Now, what can happen is this. What price can do is it can start to do this. This is when a BME cycle fails, and this is when there's a correction, right? So today was a correction play, right? It's when price gets to this 50% here and it doesn't break the high. So it then starts to do this, and then eventually bang, right? So when it takes that out, it's now the beginning of a BME cycle towards the downside. So then I start to look at where are my key points that basically give me what I need to take a sell, right? So in this scenario, price will break this, it will come up, it will take out this engineered liquidity that's here, it will mitigate the 50% of this swing, right? So that push up, something like this, right? So it swept that and it's gone down, right? So this now becomes what I call a bearish BME cycle, and I'll draw it with the mitigation tool. So that becomes your protected high. This is the, well, this one is the push that basically broke. Some engineered liquidity there. And then this sweep tapped into this and then shot down. Right, so that's basically what happened there. And that's basically what happened yesterday. So if you saw my other video on YouTube, I basically did a video on, I traded live and I caught the move, and it was the same thing. I took a buy, it failed, I took a sell, and then I added to my sell, and I really rid the move down, added multiple positions, right? So this is what happened here today, right? So let's look at where we were. All right, so bearing in mind, we're respecting bearish order flow on a 15-minute. Now, what I was explaining here is we started to build a case for a bullish BME cycle, right? So I'm going to draw the bullish BME cycle. I'm going to talk about different components. Okay, so this is the sweep, right? So this swept this. This is the beginning of the BME cycle, right? So this low, taking out this low and then breaking this high becomes this part of our BME cycle. So that's that bit, break, come back in, create some liquidity, couldn't break the high, or made a new high, sorry. Made a high, comes back in, sweeps the liquidity that it made. There's a fair value gap in there as well. Mitigates the 50% of this swing, which is this line here, right? So we've balanced, messes around, and then literally, as you can see what's happened, price has gone up, swept all this liquidity, hit this fair value gap, and shot down. Now, the moment it took out this low, right, we knew that this bullish setup has failed because it should have done that. It should have come down, swept this out, or even here, swept that out, and then bang, yeah. So, and then we could have targeted these draws up here, even the new, or whatever. I mean, but I don't think we're even, yeah, I mean, do you know what? Like, it could have actually been holding off of this. You know, this is not a bad setup. If this was our BME cycle here, so I'll just draw it quickly. Same thing, right? Bang, 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 bang. The thing is, it swept this high, come down, mitigated this, and then shot out of there, right? That could have been, that could have held, that could have been the play. But the fact that this failed and went the other way, we corrected because we had lower draws. London low here, London low here, London low here. and we had also this new week opening gap. So we have loads of reason to go down. Plus, I mean, I don't get too techie with trend lines, but all of this trend line liquidity, right, is what price pretty much pelted into. So it's all about the draws, because that could have held and shot up, and then you would have just been there like, oh, it wants to go up, and then it could have just, this could have gone up one more and then come down, took all this out, and then shot off, or it could have just never come back for that. It does happen. It really depends what's happening. But you don't know. Like I can't guess where the market's going. I don't ever guess. I don't claim to be able to guess. I just react. And sometimes I get it on the first attempt. I don't take any losses, and it's great. But sometimes I get clapped a few times, and I've got to, you know, just trade with correct risk management, try and win it back. Okay, cool. So I didn't catch this move. This broke this low, right? Shot back up and then come down, right? This was all at the open. The move that I caught was this little cutesy move here. And I'm going to go onto the 15-second chart because that's the time frame I caught it on. I'm going to also just cut most of this with the replay tool, so we can get straight into the price action. Okay, cool. So basically, same thing happened. Same thing happened here. As I just explained. All right, so like I just explained, right? So that's on the, so this was on the higher time frame, right? This failed BME cycle, right? So the fact that we've basically broke that, I'm now looking for a continuation. And it came in the form of, so I got a bit confused there. It came in the form of the same play that happened here, the same thing, right? So let's just look at what happened here. The same process I just explained. All right, so, all right, this low here, this low got put in, price came up, price came down, swept it out. Right, this is a sweep because then it went up and broke above here. Right, so this qualifies as a sweep. So now this becomes the beginning of our play. Right, so I'm going to draw it. Bang, comes up. Now here it's creating liquidity, right? So what we're hoping for is the price comes up there, comes in, sweeps it, and shoots out of there. Right, and that would be our BME cycle, right? Because price has created liquidity. Yeah, we've created liquidity here. This should come into here, manipulate into here, mitigate the 50% of this, take this out, and it should shoot out there. It didn't do that. It failed. It literally failed, and we took the sell on the basis of the fact that the actual cycle failed. So we're now actually technically making bearish market structure towards the downside, because every time you get one of these, you basically, this is market structure. So I mean, for a buy setup, right, that's a good sign, right? That's what you want to see. You want to see price shoot out of there, leaving a fair value gap, because then you know, okay, order flow has changed on a smaller time frame. Liquidity is being created, price is manipulated into it, and it's going to shoot out of there. So if I'd have got inverse fair value gap to go up, which we got one here, right? But the good thing is, this took out this low. Otherwise, this fair value gap, inverse fair value gap, is literally the buy signal. So can you see how this candle here came down here, it left a gap, and then this candle inversed it? That would have been a solid buy signal. But because we took this low out with this, I knew we're not going up, right? I knew at this point we're probably going to go down. So then we flip, right? This has not held. We flip, and then we can look here, get rid of this. This has failed. Oops. That's failed. Now, what does happen is the 50% of this range becomes a liquidity target for when price shoots up here. All right, I mean, price got really aggressive and shot up there, swept out this high here, and then reversed, bang. All right, so we can even draw the BME cycle on the way out of here. I'm going to leave that there because it's important. But there's the sweep. There's the breaker structure. There's the pop back in, sweep, and extend. And that's why we took this trade. I'm going to draw the BME cycle on there the same way I've just drawn it. So there's the sweep. There's the breaker structure. It's the pop back in, creates liquidity, sweep, and extend. Right? So you'd want to be drawing your, let's get rid of this. Let's ignore that. Let's draw our primary mitigation target. So the first tap back in is liquidity, this one. This candle here, yeah. I'm going to jump onto the 5-second chart just to show you what I'm talking about, just to give you a bit more detail. All right, so this is what I'm talking about. That sweep was the beginning. Then that breaker structure told us we're going down, right? Now all the early sellers, oops, all of the early sellers are here, yeah? You get excited and then price comes back and wicks in. Okay, that's why there's liquidity here, because what you had was all the breakout traders doing this. Right, and then price just comes in and just takes them out. All the early sellers. This is why this is liquidity. Price pops back up, sweeps them all out, and then makes the move. So if you've ever been caught up in that, and price is then shot in your direction, you were an early seller or an early buyer, you got swept out. That's what happened. Then price is now tanked off of that. Right. So again, it's a BME cycle. It is a BME cycle. Bang. Liquidity swept. And then this is your secondary mitigation target. So this is the block that caused the break. This one's important. So that's why price doesn't normally take this out. It's come into it. And then from there, we've changed direction. Bang, 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 and then extend. Right. So that is what you want to see holding. And as you can see, price just popped into the 50% of it and then got swept out and then bang out there. And that's how you catch like bangers. Like that's like a banger. I put my stop loss above this high because this high here is my protected high. If that gets taken out, then basically because it swept here and took out, didn't take that out, but it took enough liquidity out to give that break. So that's quite significant there. And then that's it. Literally, I had again lower draws. I TP'd at the first draw liquidity, which was this London low here. And I was done. Like I don't need to, that was what's 60 points. So I risked $400 or $500 for a 1-to-1. It did go a little bit more into profit. It was like $600 in profit at one point, but then I TP'd. I wasn't trying to hold it for too long. The move played out how it was supposed to, and just rinse and repeat. Like same move every single day, same pattern every single day. And that's it really. If you found this useful or valuable, then please give me a like, subscribe to the channel, and I'll be here just trading, catching moves and explaining my process. There was a video of me doing this live. This has actually been, so this yesterday I caught a similar play. I caught a sell in the same way. The buy actually failed and I took the sell, and the sell was actually a banger, and I added to my position as price continued to develop and provide these plays. So if you want to look at the video, I think from the 13th of January, the one before this, you will see me do this in real time, explain my process, show my entries, show my point of validation, and just kill it. So yeah, thanks guys, thanks for watching, and that's it for me. Peace.